Good morning, traders. It's Tuesday, September 25th. Taking a look at the charts, equities having a little bit of a pause pullback, continued today. Overall, it's had a very nice run over the past couple of weeks, and now it is taking a little bit of a breather. So nothing too extensive at this point. The market drifting down towards the 20-day working its way up. As you can see, it has bounced up the 20-day for the last, most of the year. And so we're getting back down to that level, and it's just working its way there. We'll see how things unfold. Again, short-term wise, the market a little bit overdone, a little bit of FOMO over here on our FOMO chart, and the market having a bit of a pullback. This is all still healthy price action, just short-term extremes of sentiment. And today, money's flowing out of equities. It is also flowing out of bonds. But if we take a look at TLT kind of holding tight here. It looks like it might be trying to turn up. Now, there's a few things with long-term bonds. If you look at the 50-day moving average, is more or less been trading sideways. The green 150-day moving average is trading sideways and slightly up. And now we have all the key moving averages layered in a bullish way. So the 50-day is above the 150-day. Then we got the 20, and we got the 5-day, and price is more or less above those. So this might be a turning point for the bond market. If we go back, last time we kind of had them cross above, it was right over here. We did see bonds have a pretty good pop. Now, in the grand scheme of things, the market is still in a downtrend, but we are starting to see signs that maybe things are shifting. So we'll just have to play it by ear and let the bond market work itself out. And it could become an opportunity down the road for when the stock market gives us a sell signal, bonds could move higher. We have been seeing that more so over the last few months. We do see the stock market struggle a bit, and bonds tend to get some money flowing into them. And now that interest rates have, technically started to move lower, this might also change the tide. And we could start to see this want to head higher, which will be interesting to see. If we look at the 30-minute chart of bonds, you can see it's dipped into an oversold territory as it's kind of trading sideways on the chart here, and maybe we're going to see it pop. Overall, if we look, we do have the dollar up slightly today. If we look at the dollar index, it had a nice bounce yesterday. It's a little bit higher today. Even though the dollar is up a bit today, we're seeing gold and silver up. Gold's up a little bit. Again, it's pulled down to the 5-day moving average, which is a high momentum bullish phase. It could very easily pop and continue to extend here. If we look at silver, it's up 2%. It's actually really popping and extending to the upside, already bouncing off that 5-day moving average. If we look at the gold miners, GDX, we are seeing in pre-market, GDX is set to open a little bit higher this morning. It closed down here. It was a full day of selling yesterday. And today we're starting to see it have a little bit of a gap to the upside, probably getting a bit of a bounce. Again, we are in, when we look at this, the monthly chart of miners, obviously we are going pretty parabolic when you look at these last couple bars compared to where we were the last time. So it is moving higher. When we have these very strong bars to the upside, you can get a lot of sharp pullbacks and rallies along the way. And in the grand scheme of things, if we zoom in, the market taking a little pause, it is still trending strongly to the upside. You do not want to bet against this. The precious metal space could still explode higher, as we talked about many times. This comparison, we're in a spot here where the stock market, even if the stock market like in 2007 was to fall 20%, gold could shoot up another 15 to 30%, which means we'll probably see miners and silver shoot higher as well. So there's still, we're in this scenario, very similar price action setup. In terms of the dollar down, stocks and gold at all-time highs, we're in this similar type of scenario, and this is the exciting part for precious metals. Like, we wanted this big run; it's been running for a few years, and now is really taking off. And those, if you're holding miners or physical metals, this is a pretty exciting time, and what we want, what we've wanted to happen for a long time. Now, if we take a look, let's take a look at utilities real quick. They have been moving up as the stock market's been going down. So it'll be interesting to see how utilities move today. But overall, not a whole lot going on in the markets. It's just a little bit of a pullback in equities and the NASDAQ. If we look at the NASDAQ, you can see just fading down a little bit. Little bit of profit taking after a multi-week run. And we just let the underlying trends continue to play out. Today is a gap down. As we know, gaps tend to get filled. We have a series of little bear flags. If we look at this 30-minute chart here, We had a drop, a little pause, a drop, another bear flag, a drop, a bear flag yesterday, and the market is set to open at 593, which is right down here. So we're going to see the market gap lower, probably somewhat of a measured move down here, and we could see it easily rally back up and fill that gap. And this could be a little bit of an exhaustion gap. We're down at the 5-day moving average. It gaps down. People panic out today. Whoever's going to panic will panic out, and then the market reverses. And then for all we know, this market ends up running and starting another run higher. So that's kind of where we are. These gaps are usually signals of exhaustion and usually a turning point. So people who are feeling the pain and who have been selling through here, today's gap is usually the type of thing that actually is a final straw. It scares out the short-term traders who are zoomed in way too close, and then the market will take off without them going forward. So that's kind of what we're looking for, is a gap fill this morning and hopefully higher pricing after that. Always take care. Bye-bye.